right? So today we are going to start with a new concept, that is we are going to learn the other financial statements, that is notes to accounts and cash flow statement. So in the previous class we have started with balance sheet and statement of P&L, and in today's class we are going to learn something called notes to account and CFS cash flow statement. Before going to today's concept, just a quick recap. What is the schedule that we are following to prepare balance sheet, and what is the part number, whether it is part 1 or part 2, and what is the act under which we are preparing the balance sheet of companies. I repeat my question. I want you to answer the schedule that we are following to prepare the balance sheet of companies and the act that is governing us to prepare the balance sheet of companies, and as per the part 1 or part 2, or which part of the schedule is used to prepare the balance sheet of the companies.
Sir, balance sheet is prepared based on Schedule 3 of Part 1 of Companies Act 2013, sir.
Very good, excellent. What about your statement of P&L then?
Sir, it is based on Schedule 3 but Part 2 of Companies Act 2013, sir.
That's it, perfect, good. So now the third concept which you're going to see today is all about your notes to account. So notes to account is also a financial statement first of all. Okay, so notes to account is a statement which is being attached to the financial statements, and it is a part of your financial statements. Okay, so notes to account is a part of your financial statements. It will contain the details of the items which has been recorded in the balance sheet and also in the statement of profit and loss account. Okay, and besides this, the significance of this particular notes to account, okay, is that based on the accounting policies and the additional information what is required that needs to be disclosed as per the schedule 3 of the Companies Act 2013, and it has an explanatory notes. So in simple terms we can say it as notes to accounts. Okay, notes to account, this you can find in both the financial statements. One, you will find it in balance sheet, and at the same time you will find even in statement of P&L. That is the reason we say in simple terms it is a part of your financial statement, because these two are financial statements. Okay, statement of P&L and balance sheet of financial statements, when it is appearing in both of these documents, it becomes a part of, okay, financial statements. So your notes to account is a part of your financial statement. And what does it trying to give you? It tries to give you a detailed information about the items. Okay, provides, okay, it provides detailed information. Okay, it provides detailed information about the items appearing in balance sheet and statement of P&L. And not only that, it has been purely prepared as per the accounting principles, and also it gives a detailed explanatory note. That's what we say, it provides an explanatory note, and all these things are purely based upon your Companies Act of 2013. Schedule 3. Okay, so according to the Schedule 3 of the Companies Act of 2013, your notes to account will provide a detailed explanatory note, and also it gives you a detailed information, okay, about the items, or in other way we can say it as it provides you the additional information that requires to be disclosed. Okay, for example, let me give you an example. Okay, in balance sheet you would have seen under concept of particulars. So in particulars there was a head, you had something called as a note number, then you will be having two columns, one for the current year and another will be for the previous year. Say for example, one for the current year 31/3/24 and the previous year will be as 31/3/23 amount in terms of rupees. Now the first item will be as equity and liabilities. Under this equity and liabilities, the first item will be as what? Shareholder funds. Am I right? Shareholder funds. The one which I am writing in yellow is your major head, and then the one which I am going to write, okay, using the blue color will be your subhead. Under this shareholder funds, you will come across something called as share capital, right? Am I right? There's something called as share capital. Now this share capital will be having the value for the current year and previous year. Say for example, in the current year the value is shown as 5 lakhs. In the previous year the value is shown as 3 lakhs. Okay, now look into it. What has happened? The value of share has increased or decreased in the current year? In the current year the value of share has got increased or decreased?
Increase this, sir.
Increased. That means when a share will increase, provided the company would have gone for issue of shares. Okay, when you will find an increase in the share value is provided if the company has gone for further issue of shares. When you can find the value of shares going to decrease, provided when the company has paid off, that is redeemed those shares. When they repay the amount of share to the shareholders, then the value of share will get reduced. Okay, this is what the concept is all about. So now here you got the share capital alone, and against the share capital in this note number column, if suppose they are marked as number 1, okay, so for example it is marked as number 1, then immediately after your balance sheet you will have a heading called as notes to accounts, which will consist of particulars, okay, and then it will have amount in terms of rupees, and this will be representing the current year. Okay, or you can have two columns, one for the current year, other is for the previous year, but most of the cases it will be referring for the current year. So now in this particular column you would have been given an information in such a way, like first number 1, you will record this 1 denotes to what? It is denoting to share capital. You will record that share capital in this, and below this you will be mentioning the breakup of the share capital, okay, which means how much is the authorized, okay, and how much is the, just a minute, good morning ma. Okay, fine. So in this share capital you will be mentioning how much is your Okay, value of equity shares, how much is the value of your preference shares? Okay, so you'll write share capital, and after the share capital you'll write it as authorized capital, and below this authorized capital you'll mention, say for example, okay, 10,000 equity shares of rupees 10 each. Okay, and then followed by that you are mentioning it as 20,000, okay, equity shares of rupees, so not 20,000, 10,000, so we'll have 10,000, okay, not equity, it is preferentials, I'm sorry. Okay, so 10,000 preference shares of rupees 10 each. Now the value will be as 10,000 into 10 will be 1 lakh rupees, and again here 10,000 into 10 will be as 1 lakh rupees. So altogether this gives you the value of rupees 2 lakhs. So the information, okay, we will be having something called how the share capital is being broken into authorized, issued, subscribed, like that we have a breakups. That breakup will be given in your notes to account. That means a detailed information about the items appearing inside your balance sheet. So here you have only a share capital, but the combination of this share capital of how many equity shares and how many preference shares, this combination you'll able to see only when you go and check your notes to accounts. Able to understand? Can you able to understand?
Sir, can you repeat once again, sir?
Okay, see here I just given you information about share capital and value. Okay, but I have not given you whether that particular share capital consists of equity shares or whether it consists of your preference shares or whether it consists of your, okay, whether it consists of equity shares or preference shares or combination of both. I have not mentioned anything in your balance sheet, but only if you go and check your notes to account you will have a clear cut clarity how many equity shares are there, how many preference shares are there, and altogether what is the total value. That value will be equivalent to the value of your current year share value. So this is what you will be learning it from the notes to account. So notes to account will give you detailed information about each and every items appearing in your balance sheet. Now let me give you one more example. Okay, there is something called as reserves and surplus. Am I right? Reserves and surplus. Say for example, in the current year, okay, the reserve value shows is 40,000 rupees. In the previous year, the reserve value shows is 25,000 rupees. Now, what is this 40,000 rupees consist of? இந்த 40,000 rupees-க்கான breakup, because reserves இருக்கு surplus இருக்கு. There is something called reserves and surplus. Whether this 40,000 belongs to reserve or in this 40,000 it belongs only to surplus, or this 40,000 belongs to both the category of reserves and surplus, how much is for reserve, how much is for surplus, and what are those reserves, what is that surplus, everything you will be able to locate it only when you go and check your notes to account. So now for your understanding, I'm just going to record here. Okay, notes to account. Okay, now for your understanding, I'm going to record here the notes to account for reserves and surplus. Okay, so what I'm going to do is let me record here as number 2, and let me mark here this reserves and surplus as number 2. Okay, so number 2 will be as reserves and surplus. Under this, I'm going to mark it as general reserve. General reserve. The value for general reserve, I'm going to make it up as 15,000. Okay. And followed by that, I'm going to give you the information surplus. Within the bracket, I mentioned this. Okay, statement in profit and loss. Statement in profit and loss. Now, the surplus value, I'm going to mark it here as 25,000. Now, both these value gives you how much the net value? 40. The total of this will be 40. Is it 40 or not? When I club the value of general reserve and surplus, 15,000 and 25,000, will it come? It will give me 40,000 rupees. Am I right?
Yes, sir.
Okay. Now this is what you can see here. I have marked here surplus, that is reserves and surplus. The total value has marked here as 40,000 rupees. The breakup for this 40,000 you will able to see only in your notes to account. Whether the 40,000 full amount goes only for the surplus, or have you allocated any amount for general reserve, if not for any other specific reserves, that information you will able to get it only when you go and check your notes to account. That is what it is said very clearly. Notes to account gives you a detailed information about the items appearing in your balance sheet or in your profit and loss account, and it has been prepared as per the requirement of the Companies Act of 2013, following your accounting principles. At the same time, what is very important, it is providing you a complete disclosure of all the items, a detailed disclosure of the items in your balance sheet and P&L account. That's why we say it is a part of your financial statement. Am I making sense to you?
Yes, sir.
Okay, so
Yes, sir.
this is how your balance sheet and notes to account is being tied, it's been aligned. Okay, you cannot separate these two items, balance sheet and notes to account. You cannot separate it, they are inseparable. When it comes to company's account, okay, balance sheet கொடுத்தாலே அந்த பேலன்ஸ் ஷீட் நோட் நம்பர் ஒரு காலம் கண்டிப்பாக இருக்கணும். அப்படி இல்லாதனா கூடயும் ஓகே, நம்ம ஆன்சர் பண்ணும்போது when you're preparing a solution, we need to introduce a column of note number. Even if no note number, that is even if they don't have any number aligned for any of the items, for namesake we need to at least prepare that column note number as a dummy column at least. If at all you have any specific number against a particular item, then you will give detailed information. If suppose they are not given you any items, okay, having a number, even then you have to show note number column without any numbers as a formality, as a custom. Okay, so this is what we call them as notes to account. So as I mentioned here, it gives you a detailed information about the items that is appearing either in balance sheet or statement of P&L. So it's a part of your financial statement, and then it is nothing but it is a what done as per the requirement of Companies Act of 2013, giving you a detailed disclosure of the items, full disclosures. So any doubt with respect to notes to account? Any doubt so far with respect to notes to account?
No, sir.
Right. The next one is all about cash flow statement. This is also financial statement. Okay. The next important one is cash flow statement. The word says very clear. Cash flow statement is a statement which is showing you the flow of cash, and it is also showing you flow of cash equivalents. When I say about the flow are of two types: inflow of cash and outflow of cash, and all these things are pertaining to during an accounting period, that is for one accounting period. That means every year over year we need to prepare a cash flow statement as a part of our accounting process. And remember, preparation of this cash flow statement is compulsory for those business concern or the business units which are involved in the securities, that means issue of shares and debentures for sure. However, it is not mandatory or compulsory that a sole proprietorship concern or a partnership concern must prepare cash flow statement. It is optional for them. If they prepare, there's nothing wrong in that. If they don't prepare also, there is no harm in that. Okay, so preparing a notes a cash flow statement by a what sole proprietorship concern or by partnership concern is not going to affect whether you're preparing it or not preparing it. It's not going to affect the process flow of your business anyway. Whereas if suppose it is a company which is involved in the securities, okay, that is shares and debentures, and you have not prepared the cash flow statement, then obviously it is an offense. Okay, you are bound to prepare it. So cash flow statement will give you information about the inflow and outflow of cash and cash equivalents during an accounting period. And most important is this statement, okay, will be important for better understanding about your financial statements. It is an essential tool for a short-term financial analysis. Why do we say it's a short-term financial analysis? Because it is prepared for a particular year. That means for a current year. That means when you are going to prepare for a current year, every current year is a short term. Okay, every year is a short term. Whereas if it is going to be prepared for a long term duration, then it will be a non-current. But since you're doing it for one period, okay, that is for one accounting period, okay, and it's a regular practice, we call them as a short term. Okay, that's the reason. Why do we call this as a short term? Because it has been prepared for an accounting period. It has been prepared for what? For an accounting period. ஒரு accounting period நம்ம prepare பண்றதுனால, okay, that means every 12 months once we prepare it, every 365 or 366 days we prepare it, or every, okay, 1 year we prepare it, or every 52 weeks we prepare it. So that's the reason we allocate this under the category of short term financial analysis. So it is an important tool of your financial statement analysis, and it is a part of your short-term financial analysis. They may ask you, cash flow statement helps to assess long-term financial analysis, short-term financial analysis, both long-term and short-term financial analysis, or none of these. What will be your answer?
Short time financial
Very
analysis.
good. It will be for a short-term financial analysis. Okay, fine. So this concepts has been discussed in detail about, okay, what is cash flow, everything in the upcoming chapter. But still, let us try to understand more about this cash flow statement. Some basic inputs let us discuss in this chapter. Okay, though we are going to deal this separately as a chapter, as a concept, but I don't want to take it to that extent or prolong it until that particular chapter comes. Before the chapter we read, before reading the chapter itself, let us try to have at least some 25 percentage to 30 percentage of the chapter knowledge. Let's see what is a cash flow statement is all about, and how many activities are there, what is essential in a cash flow statement. Everything is try to explore it right now itself. Shall we just discuss something about cash flow statement?
Yes, sir.
Okay. So now comes cash flow statement. This cash flow statement is shortly we call them as CFS. So CFS is a short form for cash flow statement. Okay. And this CFS has been prepared based on an accounting standard. So prepared on the basis of accounting standard AS 3. So cash flow statement is prepared on the basis of accounting standard 3 AS3. Last year you have learned many accounting standards. Do you remember how many accounting standards were there altogether? Totally how many accounting standards were there? Hello? Accounting standards எவ்வளோமா இருந்து எவ்வளோ இருந்து இருக்கு? Not presently. Okay. I'm talking about how many accounting standards were there. Okay. Any idea? Any idea about accounting standards? How many accounting standards were there?
Three, sir.
Three. It is more than 30, ma. I'll give you a hint. It is more than 30. Okay, probably you try to locate it and get back.
41, sir.
41 is a current number, Kana. Okay, so total number of accounting standards as on date is 41, but prior to that, okay, it is 30 plus but less than 40. So try to locate that figure and then give me, okay, whenever you get the answers for it, right? So here for this particular topic, we have to focus on the accounting standard AS3, right? And remember, in this cash flow statement, we have got basically three important activities. Okay, three important activities, namely, number one, operating activity. Number two, investing activity. And number three, financing activity. Any doubt up to this? Now,
No, sir.
okay, the concept says operating activity, it deals with your core business operations. Investing activity, it talks about investments in fixed assets. So it is purely dealing only with the fixed assets. And when I say fixed assets, it includes both tangible and intangible. And then when I talk about your financing activity, it deals with your shares, debentures, loans, bank overdraft, dividend, interest, repayment of loan, okay, and then security premium, and then redemption of shares and debentures. Redemption of shares and debentures. These are the okay criteria that is coming under the financing activity. Now, this cash flow statement, as you could see, basically in all these three activities, you will be finding out the two important segments, that is inflow of cash and outflow of cash. Or in simple words, we can say this as okay, from where the source of funds has arrived and how it has got applied. Okay, so study of, in other words, it's a cash flow statement is a study of sources of funds and its applications. ஸோ ஃப்ரம் வேர் த ஃபண்ட் ஹேஸ் பீன் ரிசீவ், எங்கேருந்து அந்த சோர்ஸ் உங்களுக்கு கிடச்சிருக்கு, அண்ட் கிடைச்ச சோர்ஸை எதில் நீங்கள் இன்வெஸ்ட் பண்ணியிருக்கீங்க, எதில் அப்ளை பண்ணியிருக்கீங்க. ஸோ தட் இஸ் அ கான்செப்ட் ஆஃப் திஸ் பர்டிகுலர் category. So cash flow statement gives you the inflow of cash and outflow of cash. Now in each of this activity when you're doing it, okay, as you said, there are three important activities: operating activity, investing activity, and financing activity. Each of this activity will provide you an end result. Okay, all these activities individually they'll give you a final result. Okay, that result will be either a positive value or it could be a negative value. Okay, it could be a positive value or it could be a negative value. Okay, in each of this activity I'm talking about it. Okay, let it be your operating activity or let it be your financing activity. Okay, you get a positive or a negative value. Even in your, okay, financing activity, you will be getting a positive value or a negative value. When you are receiving a positive value, we will make use of the term called as net cash flow from whatever the activity. If it's an operating activity, we'll denote as net cash flow from operating activities. If it's a negative value, we'll declare it as net cash, okay, net cash flow used. The word is used. Okay, that is a keyword. அங்க வந்து flow from ன்னு இருக்கும், இங்க net cash flow used in operating activity. In the same way, if it is for a positive figure for investing activity, we'll say it as net cash flow from investing activity. If it's a negative value, we'll declare it as net cash flow used in investing activity. Similarly, for financing activity also, positive means you will say it as net cash flow from financing activity. Negative means we will say it as net cash flow. Okay, I'm sorry, you need not use this word flow. Okay, if it's a negative, I'm sorry, you need not use the word flow kanna. You can just use net cash used, that's more than enough. Okay, net cash used in financing activity. So this is what you will give the declaration. Sometimes in some textbooks it will also be mentioned for the positive figure as net cash generated. Okay, if it is a positive figure, okay, instead of flow from, for positive values, instead of using the word flow from, they would have used the word, okay, net cash generated. Okay, in the flow from alternate word generated, you have generated some value. So in simple terms you say cash flow statement is also a financial statement which talks about the inflow and outflow of cash, or we say it is a study of your sources of funds and its application, okay, for an accounting period. That is very important. Okay, for one accounting period. Okay, for an accounting period, that is very important, for an accounting period. And it consists of three important activities, namely operating activity, investing activity, and financing activity. And this cash flow statement is prepared based on your accounting standard AS3, and each of this activity has a significant role to play. That is, it deals with operating activity deals only with your core business operations, and investing activity deals with your investments, that too particularly in the fixed assets. When I say fixed assets, it is both tangible fixed assets and intangible fixed assets. And then it deals with the finance activity deals with various items such as shares, debentures, loans, bank overdrafts, dividends, interest, repayment of loan, security premium, redemption of your shares or debentures. And finally, each of this activity will be providing you a net result which could either be a positive value or it could be a negative value. So if it's a positive value, we'll say it as it's a net cash flow from the respective activity. If it's a negative value, we'll say it as net cash used from the respective activity or used in the respective activity. So instead of the word flow from for positive values, you can even use the word generated, but avoid using the word generated because that is not mentioned in the textbook what has been prescribed for us in the schools or across the pan India. In TSQL textbook, it is marked only as net cash flow from. So you just use that particular word itself. Do not alter the words. But for understanding, you can make it a point. Okay, flow from can otherwise be recorded as generated. Okay, so this is all about your cash flow statement in simple. There is one more term in cash flow statement that's called as cash and cash equivalent. Okay, there is some more thing called as cash and cash equivalent. That, let's see what it is. Okay, the term called as cash and cash equivalent. So this cash and cash equivalent, it basically consists of the following: cash in hand, cash at bank, checks in hand, next draft or demand draft. Okay, and then any commercial papers and marketable securities. We call them as a marketable securities. Okay, commercial papers. So these are all the items that will be coming under the category of cash and cash equivalent. So cash equivalents are nothing but it is not literally a cash, but it is equivalent to a cash. For example, the check. If I'm going to issue a check to you, okay, that is from my check leaf, I'm issuing a check to you. The check does not consist of money unless and otherwise if it has been honored. So for example, I am issuing a check in favor of any one of my student, okay, and obviously the check has got some money value, but you will realize the money in your hand only when you go and deposit the check in the bank, and the banker should accept the check and he should honor the check. He should pay you the money, okay, whenever it has been demanded from the respective account holder's account. It will be credited to the person's account. Unless and until all these things happen successfully, it is not literally said it has money value. I mean, it is having a money, it is only equivalent to a money value. Okay, so until you realize the money literally in your hand, we won't declare that the checks having cash. It is having a money value. Okay, so that's why it is equivalent to cash. So cash means literally it is a cash. Okay, but cash equivalent means it is not having cash literally, but if suppose that particular document is being honored by the bank, obviously that becomes an equivalent to the cash. Okay, so this is what a concept of cash and cash equivalent, which will be one of the most important segment in cash flow statement. So I hope rough idea, at least some 25 percentage of the syllabus what is cash flow is all about, I made it to understand. okay, from the given gist. What is a cash flow statement, why it has been prepared, and how it has been prepared, and what are the activities that is coming under the cash flow statement, and how will you declare the positive values as, how will you declare the negative values as, and what are the items that it deals with it, each activity, and examples of that. What is a cash and cash equivalent is all about it, okay, and under what accounting standard we are preparing the cash flow statement. And who has to prepare cash flow statement? Compulsorily by all those business firms and organizations which are involved in the securities market, that is issue of shares and debentures. Okay, however, it is not compulsory, it is only optional for the sole proprietorship and for partnership concerns. It is optional for sole proprietorship and partnership concerns. Any doubt with respect to your cash flow statement?
No, sir.
No, sir.
Right. Now let us understand the objectives of your financial statements, okay, and then its users, limitations, all those things, and then we'll move on to the concept of major head and subhead, okay, and we do have something called as an operating cycle. So this objectives of financial statement is replica of what you have learned in grade 11, okay. If you just look at the points, you'll have a clear cut clarity. So objectives, okay, of financial statements. The first and foremost objective of financial statement is to provide financial data on what? On the economic resources and obligation of an enterprise. So first and foremost, they okay, objective of your financial statement is to provide a financial data on what terms? On economical resources and obligations of the enterprise. The second point is it will show implications of operating profit on the financial position of an enterprise. So look at it. It shows the implication. Implication is nothing but impact. Okay, it shows the impact of your operating profit on what? On financial position of an enterprise. Okay, so this you have to understand very carefully. The word they used is okay, operating profit. What profit is this? It is an operating profit. So the word operation or operating refers from the core business operations. So operating profit on what? Financial position of an enterprise. Now tell me one thing, from where you will get the result of profit or loss? Operating profit or net profit, whatever it is, from where will you get this information about profit or loss? From where you will get the value of profit or loss? Hello? From where will get the source of profit or loss, ma? Hello? Can you able to hear me?
Yes, sir.
Yes. Are you all aware or you're sleeping?
Yes, sir.
Yes, sir, in the sense, for what you're saying is, sir,
We are all here.
you're all okay. Have you woke up or you're still in the sleepy mood? Girls? Hello, girls.
They,
Kindly give your presence whether you're awake or you're in sleepy mood. Or have you gone to the hibernate mode? Hope you are all in the active mode, right?
yes, sir.
Okay. Then provide me the answer for the question what I have raised it. Operating profit. Okay, so operating profit means from where will you get this information or by preparing which account you'll get to know profit or loss. Which account will give you the information about profit or loss?
Profit and loss account, sir.
அதை சொல்றதுக்கு இவ்வளோ நேரம் யோசனையா? ஆயிரத்தெட்டு அக்கௌண்ட் இருக்கிற மாதிரி. So your statement of P&L will see. So your statement of profit and loss will give you the impact of operating profit earned during the year. Okay, what is normally the scenario of profit when you are done your final accounts for a sole proprietor or even for a partner? What happens? Your profit and loss account will give you the information about profit or loss. From there, what will you do? You'll take the value of profit or loss to a statement called as balance sheet. Am I right? In
Yes, sir.
in balance
Yes,
sheet,
sir.
what is the impact of this profit or loss? What will you do with the profit or what will you do with the loss?
So profit will be added with the
Added with.
capital, sir.
Okay, what about the loss?
It will be subtracted from the capital, sir.
That means where it will be done only in your balance sheet liability side. Am I right?
Yes, sir.
Okay. What is the other name of balance sheet? The other name of balance sheet is positional statement, right?
Yes, sir.
Now you just see what I'm trying to say. It will show the impact of your operating profit on the financial position of an enterprise. That means once you get the net result from the P&L account, it will be shifted to your what positional statement. That is, it will be shifted to your financial position. Okay, that is your balance sheet of an enterprise. So it gets either added or deducted depending upon the net result. Hope it is clear to you what happens, the impact. So your financial statement will give the impact because from the statement of P&L, okay, we are shifting or we are transferring to your balance sheet. That's a sequence, right? So in that way, it is getting connected. It shows the impact of your operating profit on the financial position of an enterprise. So profit என்ன ஆறுது financial positionல add ஆறுதா less ஆறுதா எங்க கொண்டு போறோம், that impact you will come to know by looking at a financial statement. Hope it is clear to you. Now, the third point, it will provide the information about the cash flow to whom? To the investors and also the creditors for assessing, comparing, and evaluating the potential cash flow in terms of amount. So, obviously, just now we saw there is one more statement called as cash flow statement, which is also a financial statement, and this information in cash flow statement, okay, it provides the information in the cash flow statement to the investors and also to the creditors. For what purpose? For these three information, for assessing, computing, and evaluating the potential cash flow. That is, what could be the earning capacity, what could be the potential cash flow in terms of amount. Okay, so here also you not mug up. Again, I'll give you a easy mnemonics to understand. Okay, when it comes to cash flow statement, okay, you remember this is, okay, is like Tata is. Okay, A stands for assessing, next comparing and evaluating. Okay, so you did not mug up or you not just by hearted or just store it just like that. Why these three things? You have to first assess, then you need to compare it, then only you'll able to evaluate it. By comparing the value, you'll come for a conclusion, evaluation. Okay, so assessing, comparing, and evaluating. So the cash flow statement will help out the investors and also the creditors in assessing the document. That means they'll able to compare the values of current year and previous year, and they can come for an evaluation. This helps to understand the potential cash flow in terms of amount. Any doubt up to this 3 point?
No, sir.
Right.
Okay.
Moving on to next. It will also provide sufficient and reliable information. Okay, it provides sufficient and reliable information to whom? To various parties who are interested in the financial statements. So we'll be looking at it. Who are all the important members or the essential parties or the members interested in the financial statements of a company, which we learned even grade 11. Internal users and external users, the same thing here. It will provide a sufficient information and also a relevant information, which we call as a reliable information to those members or the parties who are eagerly awaiting for the financial statements of a company. Next is, it will present, okay, a true and a fair view of the business. So what is the performance of the business? A true and a fair view we will able to come understand from the financial statements. And then the sixth point is very clearly to assess effectiveness of the management towards the utilization of resources of the business. So how effectively, okay, you have utilized the resources of the business. This point you can connect with your first chapter of your business studies also, where you'd have come across, okay, the management, right? The first chapter, what is the first chapter in your BS? What is the first chapter in your business studies, man, in grade 12?
Natural significance of management.
Yes, nature and significance of management, where one of the important terms is management is everywhere, it is pervasive. So in the same way, you learn two important terms over there, effectiveness and efficiency. So effectiveness, okay, effective, it says to assess the effectiveness, okay, of the management in utilization of the resources of the business. So how effectively the management have utilized the resources of the business, you'll able to identify from the financial statements. And next comes is your seventh point, that says that it will provide the information about activities of the business that is affecting the society. Okay, so it provides information about activities of business that is affecting the society. And finally, it will disclose or it shows the accounting policies which has been followed, what accounting policies has been followed, and what accounting standards has been followed, okay, in the accounting process. That means right from journalizing, ledger preparation, trial balance, okay, and then final accounts and balance sheet, all these things comes as an accounting process. So what is the accounting principle that we have followed or accounting policies that we have followed, okay, in the process of accounting for a better understanding, okay, so for having a clear understanding or a better understanding of your financial statement. This is the objectives. Any doubt in the objectives of your financial statement?
No, sir.
Okay, if I just give you 5 minutes time, probably if you want to recollect the points whichever has been highlighted, you can do it. Or if you want to take a point notes of this bulleted points, yes, you can do it. So it will move on to the next concept in another 2 to 3 minutes. I'm just giving you a maximum of 5 minutes time. Whether you want to learn, keep in your memory, or you want to take a note of this, yes, or just you have to recollect, read, and make it confident. It's up to you. Once you're done with this, we'll move on to the next concept called essential features or essentials of your financial statements. I hope this 8 points there is no doubt for anyone. It's very clear and self-explanatory. Am I?
Yes, sir.
Okay, fine. Yes, please. So just I'm giving you a minimum of 3 to 4 minutes or maximum 5 minutes, not more than that. Make sure you understood all the 8 points. If there is any doubt or if you want me to reteach any of these 8 points, yes, I'll do it. If there is nothing like that, then we can proceed for the next concept and next topic. Once if you have done it, please let me know, so that once everyone have completed, we'll move on to the next concept. Yeah, completed, Kana.
Done, sir.
Okay. So I think 2 members out of 5 has completed. Let me see what about the remaining 3.
Completed, sir.
Okay.
Completed, sir.
Okay. So I think all have completed. So let us move on with the next concept that's called as an essentials of your financial statements. Even this essential of financial statement is also a theory concept where you learned in your grade 11. You are just going to apply few more concepts with that. Okay. So what is essential? This could be as characteristics of financial statement or essentials of financial statement. Both means one and the same. The first and foremost is all about factual information. So the financial statement must provide only the factual information and not something which is an imaginary one. Okay, like that. Which means financial statements should disclose factual information about the financial position of the company. So what is the current financial position of the company? That should be disclosed by the financial statement. Or it could be stated differently that financial statements should give true and a fair view of your financial performance and financial position of the business. Now here you can see we are using two different terms. One is about the performance. Okay, we're touching about the performance, and second we're touching about the position. We are talking about what? Financial statements. We're talking about financial statements. Remember, financial statement, when I say, it covers all these items. What are those items? Okay, it covers profit and loss, it covers balance sheet, it covers cash flow statement, it covers the notes to account, right? So you know very well that the term profit and loss, okay, so P&L account is otherwise known as income statement, and this particular statement is prepared to find out the performance of your business. So your business performance you'll come to know from P&L account, whereas from the balance sheet what you comes to know? Position. Okay, the positional statement. Do you remember these two things what you learned in grade 11? Okay, your financial statement, there are 4 different financial statement. So here we are so far saw all the 4, but we are talking about these 2. So about the performance, if you want to know the performance of your business, go and check your P&L account. If you want to check out the financial position of your business, go and check out your balance sheet. So that's what they say here. Okay, about your balance sheet and about your P&L. So they are saying financial statement must give a true and a fair view of the financial performance, that is about your P&L, and also about your financial position, that means about the balance sheet of a business. Hope the first point is clear to you all. Any doubt in the first point?
Yes.
Okay.
No.
Moving on to second point, understandability. So the statement whatever we are going to prepare, whether it be cash flow statement or whether it be a profit and loss statement or be your what's say balance sheet, what it is, it must be understandable. பார்த்தா புரியிற மாதிரி இருக்கணும். Greek and Latin மாதிரி ஒண்ணுமே புரியாத மாதிரி இருக்கக்கூடாது. Or at least certain things must be self explanatory. கொஞ்சம் புரிஞ்சுக்க முயற்சி பண்ற மாதிரியாவது இருக்கணும். ஓகே, ஒண்ணுமே புரியாத மாதிரி இருந்தோம்னாக்க then it is mere waste of preparing those statements. The statement should ensure that must be in a position to understand. So people who don't have the knowledge of a particular subject, even when they look into the concept, they'll have at least okay an idea about what it is. ஏதோ கொஞ்சம் புரிஞ்சுக்க முயற மாதிரி இருக்கும், ஒண்ணுமே புரியாத மாதிரி இருக்கக்கூடாது. Okay, so understandability. Your financial statement should be prepared following the okay accepted accounting principles for a better understanding of the users. Okay, so what means, it says very clearly you need to adhere to the accounting principles. Okay, that means policies. Okay, what are the accounting principles that we learned in grade 11? All the accounting principles must be rigorously followed when you are preparing the financial statement, so that it becomes easy understandability, which means you learned one of the accounting principle as full disclosure concept. So wherever whatever is required or necessary, that needs to be recorded, that needs to be disclosed. Only then a proper understanding can take place. Now to make this very simple, to okay, I want to make you to understand very simple. Just we started the day, okay, with something called as your balance sheet, okay, notes to account, all these things. So to explain this notes to account, I said it is a part of your balance sheet. In the balance sheet, what will you have? Then I try to make you to understand what is this note number is all about and how it is getting connected to a financial statement. Now look into it. If suppose I don't have this notes to account, okay, for the above balance sheet, will this balance sheet be meaningful? I'm just giving you an information of balance sheet, say mentioning only share capital, the value of something, without mentioning whether it is consisting of equity shares or a preference shares, okay, or combination of both, whatever it is, or even the reserves and surplus, whether the amount of 40,000 fully belong to surplus or some portion belongs to reserves, some portion belong to okay surplus. If I'm not giving you that input, okay, a detailed information, will it give you a meaningful idea or will you be able to understand the balance sheet?
No, sir.
Definitely not, right? If I'm not going to supply you with the notes to account, obviously people will find it very difficult to understand the financial statement, whatever it is. Whether even the person might be a learned scholar of accounting, okay, even he might have okay accountancy knowledge to the core, but they find it difficult to understand in what combination or proportion this share capital is or reserves and surplus, what are the combination or composition of this reserves and surplus. They'll definitely find a hiccup. So that's why we say okay, when you are preparing a financial statement, the financial statement must be understandable. So you have to provide it with the required data or the required information following the accounting principles. So that notes to account, I can say it is nothing but it gives you a full disclosure. It is disclosing everything about your share capital, how many shares, what is the face value, what is the total amount of authorized value, issued value and subscribed value. Everything has been recorded black and white. So that means you will able to understand easily what is the total capital of the firm, how much the company has come forward for the issue, how much they have got the subscriptions. So what is the amount that we are able to collect as a share capital? பார்த்தோன்னே எல்லாமே தெரிஞ்சிடும். That's what we call it as understandability. Hope it is clear to you. Understandability.
Yes,
Now,
Yes.
sir.
the next third concept is all about comparability. Okay, that is comparable. It must be comparable. So the financial statements, okay, should disclose the information in a manner that the users can compare the information of the same entity over the years, which we call them as an intra-firm comparison. And also it will help to do the comparison, okay, of the company's financial informations with that of other companies, which we call as inter-firm comparisons. So now I'll tell you an understanding. Okay, I'll give you an example for easy understanding. Every month your school is conducting some tests or exams to assess your learning outcomes, to assess your understandability, okay, in a particular subject. So they are conducting tests either for 40 marks, 80 marks, 60 marks, 25 marks, whatever it is. And whatever the marks that you are obtained is been recorded in the mark register maintained by the subject teachers, and also it has been consolidated by your class teacher, and these marks is being entered even in your report card. Now when a particular exam gets over, your report card is given to you. Imagine that as of now 3 exams got over for you. So once if you get the report card after the third examination, you can have a thorough check of the values, what your students, of the marks, what you have fetched. Okay, you can say, okay, whether have you improved or you're not improved, you're in the same level, or have you gone down. You can just do a comparative study of the marks, what you have fetched in each and every subject, okay, during the three tests. In any one test have you increased, or you are maintaining the same level, or you're decreased. So what is your position, that you'll able to understand it by comparing your performance with your own performance. This is one type of comparison. You are doing the comparison of your own marks, okay, during a particular period of time. This type of comparison is what we call them as, okay, intra firm comparison. Okay, we call them as an intra firm comparison. Or let me give you another way example also. Now suppose there are some schools which has got group of schools. That means they have a head main school, and followed by that main school they'll have branches. Suppose if that particular school wants to conduct the result analysis, okay, of the 10th and 12th students marks once the result has been declared, to ensure which particular branch has given more result or better result or excellent performance, then they will do the comparison in such a way that what is the score produced by the main branch and what are scores produced by the sub branch. When you are going to compare, okay, the performance of your own school, okay, with different branches, we can consider that as an intra firm comparison, because it is within the same school of different branches. Suppose if one particular school, say for example ABC school, is going to conduct the same result analysis with one of its neighboring school, very next building there is one more school, XYZ school. Okay, if ABC consider XYZ is only competitor for them, or okay, if they want to do a comparison with that XYZ school, then we call them as an inter firm comparison. Okay, so conducting the comparison within the organization we call them as intra firm, whereas conducting the comparison, okay, with others we call them as an inter firm comparison. I hope it is clear to you. So here in
Yes.
comparison, okay, you have to come across these two words. One is intra, okay, intra firm comparison. So intra-firm comparison is within the same organization. Okay, within the same organization. Whereas when it comes to the term called inter firm comparison, it is between various organizations. Clear? It is between various organizations. So that is what about your comparable. It must be comparable. The next is verifiable objectives. Last year I learned something called verifiable objective. The same thing, verifiable. Whatever the information which you are disclosing in the financial statement should be verifiable from the records of the company. So without verifying the records, you cannot present anything in your financial statement, which means it is very clear that we are recording all the transactions in the books of accounts based on some source documents. So without analyzing the source document, we will not prepare any entry, and that entry will not be taken further to any account, or we will not prepare any other statements. So basically it says very clear that whatever the information that you are disclosing in the financial statement, whether let it be a balance sheet, or it will be a statement of P&L, or let it be your notes to account or cash flow statement, whatever it is, ensure that you have verified the records of the company. And then comes the fifth point is relevant. That means it must be for a specific time period. So whatever the information that you are disclosed in the financial statement should be in accordance with the legal requirement. So as per the legal procedures and requirement, relevant document, you should have it, and it must be reflecting in your financial statement. It is so because they are considered relevant to the users who have been set after the public debate. So that means whatever is essential for a meaningful comparisons, or whatever is required as per the norms or as per the legal procedures, it has to be mentioned. It has to be relevance, in relevance to the legal requirements, compliance to your legal requirements. The last point is all about your timelines. Okay, so which means financial statement which has been prepared and that has been presented within a reasonable period. So you will be preparing the financial statement and you will have to present it within a reasonable time period after the accounting period is over. Say for example, if I am following the accounting period, my accounting period is I am following April to March. That means from 1st April 2024, let's say it is on 31st of March 2025. This is 1 year. So this is the accounting period for which I'm going to prepare the accounts right now. Now, when will I close my books of accounts? My books of accounts will be closed on 31st of March 25. On this date only, my books of accounts are closed. Then when I will be able to present the details only on 1st April 2025, because the very next day only I can able to present it. The very next day is 1st April. If not, at least by first week of April, I should be in a position to present it. Why so? Because suppose I couldn't able to identify, if suppose I am unable to identify some bug, say for example there has been some suspense account. While we are doing our accounts, we have come across something called a suspense account. Now it is my duty to find out what is that suspense is all about, what caused the indifferences. I should find out and I should arrest that suspense. So it will take some extra time for me to complete my final accounts, and then only I am able to go for the presentation. So that's the reason it says it might take some extra time due to such type of issues. So financial statement should be prepared and must be presented within the reasonable period after the accounting period is over. And at the same time, the financial statements may lose their relevance. It says like it may lose its relevance. Okay, relevance is what is required as per the legal procedure, or relevance is for the time period. So sometimes it may lose the relevance because of undue delay. The delay happens only because of such type of issues. There is something called as an, okay, imbalance, that is, it is not getting matched up. The reason is some suspense is there. We need to find out what is the suspense all about. So due to this undue delay that is caused in the release of such information, so that means unless and until if you don't find out what is causing the suspense, you cannot release your financial statement. So thereby it loses its significance, or you will have to undo some time delays. So these are all about your essential, okay, features, you can say, or it's all about your essentials of your financial statements. Any doubt in this 6 points whatever we discussed right now? There have been some 6 points. Okay, tell me whether if you have any doubt in this 6 points.
No doubt, sir.
Okay,
No, sir.
probably I'll do one thing. I'll give you the same 5 more minutes time for you. Okay, just have a glance and then let me know whether if there is any doubt you have, or if you want me to repeat any of the above points. Okay, so it's hardly right now is 6:30. Okay, by 6:35, let us come to a conclusion of this concept. Then we'll move on to next concept. Once if you're done, you can let me know so that we can move for the next concept of this particular chapter.
Completed.
Completed, sir.
Okay. So how about still three more persons?
Completed, sir.
Okay. Two more, I think they have to give a response, right?
Completed, sir.
Okay.
Completed, sir.
Right. So let's move on to the next segment. Any doubt so far? Is there any doubt to anyone so far in understanding these concepts?
No, sir.
No, sir.
Okay, thank you. The next comes is the parties who are interested in your financial statement. Okay, the users of your financial statements. So yes, this concept you have already learned in your grade 11. Okay, the internal users and external users. Probably anyone can read this concept, the others will listen to it. If in case there is any point to be explained, I'll explain. If the point you find it self-explanatory, then we can just move on to the next segments. So who's ready to read the first concept, internal users, the parties who are interested in the financial statements or users of financial statement? We can club them into two categories, internal user and external users. So who's ready to talk about the internal users? Who will read the internal users passage?
I'll read, sir.
Yes, Kanna, please proceed.
Management has the responsibility to not only safeguard the investment but also to increase its value by managing the business efficiently and maximizing profit. Management makes intensive or extensive use of accounting information to arrive at informed decisions such as determination of selling price, cost controls and reduction, investment into new projects, etc.
Okay. So the first point says very clear that management is responsible for all the activities of a business, of course. But here it says like management has got the responsibility not only safeguarding the interest, okay, or not only safeguarding the investments, but he also the management is also having another responsibility, that is to increase the value by managing the business efficiently and maximizing the profits. So efficiently you have to manage and maximize your profits. Management, okay, makes extensive use of the accounting informations to arrive at some decisions, right? They have to take up some call, a decision, which means determination of a selling price. For example, okay, I am producing some goods, I am manufacturing some goods. Obviously I am a company, okay, who is dealing in a particular line of business, and my company definitely has got something called as a management, because you learn in your BS management is present everywhere, it is inevitable. Okay, the first chapter, the same way. Okay, so management needs to take some decisions, like deriving the selling price, what is the selling price of this particular product is. If I want to arrive at the selling price, obviously I need to do some workings with the help of the financial statement. And cost control, if suppose somewhere things goes out of my control or feel that it is something, okay, going to fetch us a huge loss, then I should arrest that by controlling certain things. So cost control, and yes, reduction, and then investment in some new project, whether it is advisable to invest in a new project or not. So all these things is very essential as a management. Okay, and as a user of financial statement, okay, this is what you do from the financial statement after analyzing it. Okay, so I think internal users, there is no doubt about it, it's clear, right?
Yes, sir.
Okay, now
Yes, sir.
who's ready to read the second category, that is external users? And the external users, first one, shareholders. Can anyone read the shareholders paragraph,
I will read the
please?
shareholders contribute capital in the business and thus are always exposed to risk. In view of the risk involved, they are always interested in knowing the profitability, financial strength, and cash position of the company.
So, as a shareholder, okay, they have invested the money in the business, they are taking some risk by investing the money in a business, and they want to know about the performance of the business, that is what is the profitability of the business is all about, and what is the strength of the business, and what is the cash position of the company. So only then they'll able to ensure that whether will they get the expected return, what is expected, will they get it for the year or not. That purpose they need the financial statements. Yes, now who's ready to go with employees?
So should
Please.
employees are entitled to bonus at the end of the year besides the salary and wages taken every month. Bonus is linked to the profit earned by an enterprise, thus, the employees are much interested in financial statements.
Okay. So as an employee, they are very much focused or particular about their self-development, which means they need an increment in the salary, a bonus in the salary, a hike in the salary. So the employees will be entitled to a bonus, and that is only at the end of the year. And this is purely besides your salary or wages, what is paid every month to you. In addition to the salary or the bonus what is being, sorry, in addition to salary or wages what is being paid every month, okay, this, just a minute, yeah, in addition to this concept, okay, employees has been paid salary or wages, okay, they are also entitled for a bonus, okay, from the profits of the business. Thus, employees want to know how much the profit is being earned by the company or by the business firm during a particular year. For that purpose, they need your financial statements. Yes. Next, banks and financial institutions. Who will read this banks and financial institutions, Kana?
Shall I proceed with sir?
Please, please, please. Just a minute. I think someone wants to join. Huh? Mm-hmm. Okay. Yes, ma. Proceed.
Banks and financial institutions provide loan to the businesses.
Okay.
It's natural that the banks and financial institutions will match the performance of the business to know whether it is making progress as projected to ensure the safety and recovery of the loan advanced. Cash flow statement and segment reports enable them to assess cash position and whether the business segments are making progress as planned and projected.
Okay. So, just an easy understanding of this concept is many people they will have some business plan or a project. Based on the project, they will request the bank to provide them a loan. Bank will also sanction them the loan as okay, after looking up the detailed project assessment, after getting satisfied with the project proposal. So once you receive the amount from the banks for the loan, okay, what which you're going to start a business, you have to ensure that you are doing well, and bankers is very much interested in your financial performance and in your financial statements. Only then they will come to a conclusion that whether are you making a profit as you have mentioned in your project, are you able to meet the requirements, will you be able to repay the debts, okay, that means the amount what I have advanced you as a loan. Okay, all these assessment if banks wants do, obviously they need the financial inputs of the business, without which it cannot do any analysis. So for that purpose, you need the financial statements. Not only the financial statements, even your cash flow statement, and there is one more thing called as segment reports, which will also help the management to assess, okay, the cash position and about your business segments. What is your current cash position and what are the business segments, and whether are they making any progress or profits as expected. So whether things are going as per the expected one or things are not functioning as we expected. Okay, so all these things are essentials, okay, for a bank. So bank and the financial institutions are very much particular about the performance of the company in order to ensure that their money, that is the loan amount what they have advanced to the business will be received back, because only if the firm earns a profit things is favorable. If the firm incurs a loss, then obviously okay things will go in a different direction. So you have to ensure all those things. For that purpose we need financial institutions, okay, sorry, financial, okay, informations. Yes, the next one. Who's ready to read investors and potential investors? Can anyone read the paragraph of investors and potential investors? Any volunteers to read investors and potential investors?
Sir, I'll read, sir.
Yes, Kana, please.
Investors and potential investors. Investment involves risk, and the investors do not have direct control over business affairs. Therefore, they rely on available accounting information and seek answers to questions such as what is earning capacity of the enterprise and how safe is their investment.
So, as an investor, I am an external person. I don't have access to all the files or documents or the portals of the companies. Okay, so I cannot, okay, what is the access these things? So I have to rely only upon the furnished or published documents. And at the same time, I have some queries. The queries have to be okay addressed. That is, I should ensure what is the earning capacity, okay, of the business, and I should also ensure that whether my investment is safe or not, because I am the investor. I should know whether my money what I invested in the business, whether it's safe or not, or will I get back my money or not. I have to ensure the safety of the money what I have invested, because we always say one thing, that investment in the securities of a company is always subject to the market risk. We have to read the terms and conditions before we invest. So anything can happen. It can be in favorable position or it can be in unfavorable also. So before you enter into a contract or before you do any investments, please read twice thrice your terms and conditions before the investment happens. Okay, so that's why you say investors has got, or potential investors has got the right to question about the safety of their money what they invested, and also about the earning capacity of an enterprise, right? Now, who will read about Creditas? Creditas. Make it fast.
Chinmay,
Yes, please.
creditors are the parties who supply goods or service on a credit before granting credit. Credit creditors satisfy themselves about creditworthiness of the business. The financial statement help them immensely in making such an assessment.
Okay, so creditors are basically one who provides either the goods or the services to us on a credit basis. That means at the time when they provide the goods to us, they will not demand for the money. They will demand for the money, okay, only at a stipulated date. That is on the date when we have agreed to make the payment. Okay, so the creditors will never, okay, make any such type of what issues. That is, their creditors are one who provides you a time, ample time, okay, for making a payment for the goods what you have availed from them, or for the services what you have availed from them. And moreover, before granting a credit, the creditors should satisfy themselves about the credit worthiness of the business. For example, if I am going to give, I am a creditor to a particular person's business, I must first ensure that whether the company is really worth for the credit amount, அந்த கம்பெனிக்கு அந்த கிரெடிட் அமௌண்ட்டை பே பண்ணுறதுக்கான கெப்பாசிட்டி இருக்கா, will they be able to repay the amount what they are collecting from me as debt. Okay, that's all I have to assess it. So the creditors will satisfy themselves by knowing the credit worthiness of the business. The financial statement will help them immensely. That is, most probably it will help them to understand, okay, such type of financial, okay, the financial statement help them to understand about the credit worthiness of an enterprise, and thus okay making such an assessment meaningful. So this is about the creditors. So creditors will be providing the goods and services on a credit basis, ensuring that they will able to collect the money at a later point of time. And for this purpose, we need to ensure that the creditors does a proper analysis of your financial statement. That is, they understand your credit worthiness, and knowing your credit worthiness only, they are making the payment of, or they're supplying the goods and services. Yes, the next one is about your government and the institutes. Okay, authorities, government and authorities. Who will read this concept? Government and its authorities. Make it fast. We still have two more points with which we'll close today's concept.
Sir, I will read.
Please.
The government makes use of the financial statement to compare national income accounts and other information. The information so available enables it to take policy decisions. Financial statements provide input for taxation and other economic policy of the government.
Okay. So government and other authorities, where we can say it's a tax authorities. Okay. They also come under the government authorities. So the government will make use of the financial statement to compile, that means to consolidate, okay, the national income account and other information. So what is the overall income of the nation, the national income, okay, and also the other informations, they'll able to compile it off. Okay. And not only that, the information which has been available will enable the government to take some policy decisions. Okay, so take some decisions on the policy basis. And not only that, okay, it also provides an input for the taxation. That is, whether the taxes has been paid promptly or not, or how much is the tax to be collected so far. Okay, all these will be provided from the inputs. And not only that, it will also be helpful for other economic policies of the government. So when government wants to bring any some economical reforms or policies, then they can make it by looking at these inputs thoroughly. And when I say it's by the government, it includes both state and central government. Okay. For example, GST. GST is what? It is an economic policy. Okay, goods and service tax. But still, it is having a combination share of both state government and central government. Okay, CGST and SGST. In the same way, some economic reforms can be brought in, which will have the impacts. Then who will read the last point? Security Exchange Board of India.
Sure, I'll read, sir.
Yes, Tana.
Securities and Exchange Board of India, SEBI. SEBI and other agencies like to study the financial statements to see whether a company is within its limit and the interest of investor is well protected.
Right. So, like how banks are being controlled by the Reserve Bank of India (RBI). Okay, SEBI is a controller of all the companies who are involving themselves in the flotation of securities. So, whoever is dealing in the securities, whether it be a what shares or whether it be debentures, they must ensure that this company should make sure that they don't breach the contract or violate the contracts, or they don't misguide, or they don't, okay, charge a huge amount, all these things. That means they don't go beyond the limits. They are within the limits of the are within the limits of the SEBI. So SEBI must ensure that the company is ensuring that the interest of the investors are not let down. They are holding the interest of the investors, and at the same time, okay, SEBI should also ensure that the particular company is within their limits. They are not crossing their limits. So these are all your what objectives, or we can say these are all your most important part. Is we saw the objectives of your financial statement, followed by that we saw the users or the parties in the financial statements. Hope it is very clear to you. Any doubt you have it with respect to these two concepts what we discussed today?
No, sir.
So today we learned four important terms. One is your notes to account, one is about your cash flow statement, then you learn something about your what parties interested in your financial statement analysis, and then you also learn, okay, about the objectives of your or essential features of your financial statements. And of course, objectives of financial statement also we learned it today. Hope it is clear to you. Everyone, it's clear to you?
Yes.
Yes, sir.
Okay. So let me stop the session for the day over here. And yes, probably today evening we'll try to have a session for those who have a DRT exam tomorrow. Okay, for them we'll have it. Probably others who want to join for the session, yes, we can join up, no issues. Okay, so once that gets over, if time permits, we'll see few concepts from the first chapter, financial statements of a company. Okay, until then, thank you so much. If you have any doubts, get it clarified. If there is no doubt, we can end the session.
No doubt, sir.
Okay, thank you.
Thank you, sir.
Thank you, sir.
Thank
Welcome.
you, sir.
Thank you.
Thank you.
Thank you.
Thank you, sir.
Welcome, Kana.